Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, November 6th, 2008. Well, the sell-off that we have been calling for this week continued today, and it continued with a vengeance. Just an ultimate bloodbath the last 2 days, folks, and to be honest, I'm not that surprised as we knew this was coming, and I'm not that upset as we knew this was coming. It's all about positioning yourself on the right side of the market and not getting hurt because of that. That's what it all comes down to. So we thought the market might start on Monday, but it actually waited till Wednesday, at which point we had been calling for this week to be a sell-off week, and sure enough, it's been that, with the market now down 10% in the last 2 days. Really amazing to see, folks. This sell-off has just been unbelievably harsh. It's the biggest 2-day decline, I believe, since 1987 at this point. And the VIX is soaring all the way back from basically 45 back to 65 on the VIX, the fear index, the volatility index. And we saw the Dow down about 444 points today, 4.85%. The Nasdaq down about 73 points, or 4.34%, and the S&P down 48 points, or 5%. Now, you take 5% plus losses yesterday, add that to the 5% loss today. In 2 days, 10% drop. Not only that, we had called out for a bottom or a sell-off to the approximate 900 level on the S&P. I said that last week, I said that this week, and I said that yesterday in this video that we were calling for a move to 900 on the S&P. Now, 2 days ago we were at 1,005, and we all knew that resistance level. The 1,005 level we've been calling out as a key resistance for months now, whether it was a support line coming down upon or once we went back to it as of Wednesday and Tuesday closing on that 1,005 level, that was a resistance point. Sure enough, from there we came all the way down to hit 900 on the button, guys. Listen to this. This is how key these levels are that we do. 900 on the button has been tagged. The S&P went to 899.73. So 0.27 past that 900, piercing the 900 to a T. And at this point, this is where we want to start to analyze the markets in a different view, okay? Going to the intraday chart, and I'm going to set this all up today, folks, because now we're getting to that point where we had positioned ourselves short on Tuesday when the market was up big. Wednesday we had been short. Thursday we got the next big drop, which was today. Now we want to start to look for when is the point to go long in this market. All right. So in talking about this market, let's just discuss really what's going on. Well, people are realizing things aren't as rosy as they were a week ago, and we have been preaching that. I mean, we basically said the markets are 20% off their lows. This was on Tuesday and Monday and Tuesday, and you just got to have a reality check. So a 10% drop in the market seems to be that reality check, and now we want to focus in on where the market's going tomorrow. Now, tomorrow and Monday we have a key date. Now, it's not a turn date by any stretch, but it may be a pivot day. Alright, so I want to call that out here in this video, that tomorrow you're going to have a situation where either we flush out a little bit and then rally, or we have our final push down in this market. But it's very likely that tomorrow could be ultimately that pivot day where either we're flushing down one last time, or we flush down and then possibly rally up, okay, and close the day higher and start a little bounce back effect. Alright, after 10% drop, it's not going to be surprising to see that, although with the panic in the air, you just never know. So again, keep in mind, Friday, Monday, we may have a change of direction for a bounce up in this market, at which point we'll continue to evaluate. Now, let's talk a little bit about this angle here and what's going on. We saw the markets early on doing their best to not be too sold. Now, you see here, pre-market, you had a little bit of a rally, at which point we sold off, rallied back, sold off, rallied back here on the open. This is the open, so you had to push up, and really ever since that first candle of the day, we just started to sell. And the selling was so meticulous and it was almost like a calm selling. All day until probably around 2 o'clock, it was just kind of one candle after the next, one candle after the next, continued selling. And you can see that here. I mean, look at how normal this is. I mean, it's not like we have a big up move and then a big down move, big up, down, or even a bounce. It's just constant selling all day long on decent volume. Now, today, we actually had some good volume. I'll show you that on the daily SPY when we go to that chart. But right here around 2 o'clock, you actually got a little change in direction finally. You got a nice bounce up, but that bounce was just used to be sold into as we came all the way down, took out the low, and this is right when we punctured that 900 level on the S&P, so we knew that was going to come most likely. And then at that point, they rallied it up into the close to close it really just a little bit off the lows. All right, so we got a little bit of action there, and the beauty of this is, and this is just I continue to point these things out in these videos. Remember how we always talk about when you have a double bottom, you always like to see them take out the double bottom and then bounce, and that's what usually I almost always, when I'm looking for a double bottom bounce, I always wait for them to take out that low. And the reason they do that is because they want to flush out the stops. Let's say I'm an amateur, right, and let's say I went long right here. Okay, let's say right there. So I'm in the money, in the money, in the money. Now it's coming down, it's coming down. Now I'm negative, and I don't know to take a flat out there. Although as a professional trader, usually you would. You'd cut your loss there if it did, or you'd either take that at the top. But let's say you're coming down, coming down, coming down. You're going to say to yourself as a professional trader, if it breaks this bottom, I'm going to exit this play, or you're going to put a stop right there. So all the stops are placed right at this point on the market, right about 905, 90, whatever it would be, you know, in the low 900s. Well, they're going to take the market down, and the market makers know that. They know that, so they want to bust through that. And these are tricks of the trade, folks, that we've discovered, we know about, we've studied psychology and the proprietary techniques we've developed to know that this generally happens. So they take it out, take all the stops out, and what's happening when they take it out? Well, the market makers are sitting there when people sell and just buying it all up. Buy, 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 buy. They're accumulating, at which point then the market gets a bounce off that double bottom and moves up. And then who's buying it back? The amateur buys it back here. Who's selling it to them? The market maker who just bought here. All right, so it's a game. I mean, it's unbelievable the games that are played, but it's important to know this stuff. All right, guys, because we do these videos and we do all our analysis, so the amateurs and not necessarily the amateurs, but the beginners that are actually want to study the markets can learn this. All right, that's who we cater to. We want to cater to the beginners, the medium players, and even the advanced that want to improve. And they're willing to put in the time to study this, because let's be honest, it's an art. It's an art that you have to learn, and it takes time. There's no doubt about it. All right. So in any case, that's the daily analysis. Not a lot to say other than this was a pretty amazing sell-off because it was so meticulous and so constant throughout the day. Then you had the double bottom play where you pierced it and then bounced up right into the close. But in any case, folks, an ugly day, as we've been calling for. You guys know since mid-last week we said be careful come Monday, Tuesday, and then ultimately Wednesday or Tuesday I announced in the video that I went short this market. And sure enough, Wednesday, Thursday down 10%. Unbelievable volatility in this market again coming back. Now, let's talk about the daily. I want to go to the daily and talk about this. Then we're going to talk about the oil and the dollar. And again, yesterday I showed how the dollar was an absolute key to knowing which way the market was going to go. Whichever way the dollar goes, the opposite will be true of the markets. It will go the opposite way. So here's the daily chart of the SPY, and you can see the flush. Now, on the S&P, and this is not the SPY chart, but I'm just talking about the S&P 500. As of today, the 907 level was a key level for one reason, all right? It was the 0.618 retrace of this entire move. From this point here to this point here on the S&P, the pullback that we got today was the 0.618 Fibonacci retracement line, okay? So in any case, a very key number there. We actually closed a little bit below it, but as long as we held that 900, that's key. All right, so we closed at 904 on the S&P, a little bit below, but really right on that S&P 500 0.618 number. All right. Now, having seen that, the next thing we want to take analysis of is what's the next support. Like, let's say we flush out a little more tomorrow, which is kind of, we're basically going to a neutral stance. After this, we hit our 900 target from 1005. That's a 10% drop in the markets. That's what we were looking for. Everything else is gravy at this point if it continues down, but we're going to go into a neutral stance, all right? Meaning that, yeah, maybe you see a little lower, but we're thinking that somewhere around this level could be the area where we're going to start to get interested in this market. I have not gone long this market yet, but I'm beginning to watch it a little more closely, I would say. Okay? That's the best way to put it. Now, again, what's the next level on the downside on the S&P we want to watch? Well, remember the 882 on the S&P 500 that we talked about 2 weeks to 4 weeks to 6 weeks ago, and had kept on talking about it as this market was flushing down to it, bouncing off it, then below it, and coming back up and trying to recapture. Well, that's still a key number you want to watch for. So watch that 882 level on the S&P 500 as the next level if we break 900 tomorrow, and see if we can bounce off of that 882. Now, again, if tomorrow on the upside, what would be bullish if we recaptured that 907 on the S&P and actually closed above it. And that would be a decent thing because we'd be recapturing and establishing ourselves at that 0.618 retrace level. All right, so 2 levels to watch there. Notice the volume here. I said I would point out the volume. Look at that. So you're finally getting volume these last 2